Hello, everyone, and welcome to the Anarchy Day Trading Podcast. If you are looking for the best scalping advice for 2025 that money can buy, look no further. Except actually, you don't have to buy it because it's free. Because Jordan and I don't sell anything because we're not a bunch of shysters. We've been the last little while, especially early 2025, ever since the election, things are a little bit crazy. I know a lot of the people I personally know who are day traders have had a really hard time, just ask Jordan and I. So we wanted to give both general our advice and our strategy for our scalping, what we do, what we have found works for us, kind of go through the reasoning why we do what we do, and then maybe even some I guess personalized time specific ways we've been adjusting our trading given the extra volatility that's been going on lately, and hopefully at the end of this you come out learning something that you can apply directly to your tradings and make yourself more profitable. Jordan, what's up, man? How you been?
I'm doing well. It's been a long time, man. I feel like
It's been a
life,
long
oh
time.
man, time flies so quickly. We just passed the 6 month mark of being back in the US, and just have been enjoying our time skiing and fishing and just enjoying the Colorado, I guess what all Colorado has to offer in terms of its terrain and landscape. So it's been a lot of fun. So that being said, as you said, trading 2025 has not been a good year so far, but there's still a lot of year left. We're still early on in 2025, and I have high hopes that the trading will continue to improve as we go on. So yeah, I mean, just to kick it off, I mean, maybe I'll just start with how do we scalp in 2025? The one thing I would say is just guys, remember the market is volatile. If you look at the market, we have gone from all-time highs to losing what 10-15% now at this point in the last just month. And so just remember, this is a market that still doesn't really know what's going on.
Yeah, whenever you're talking about, people really not being sure, that's really what the market is based off of. It's people, it's not even necessarily, this is why trading news is so difficult, if not impossible, is that news is not good or bad typically in the market. What investors much more care about is whether things are kind of baked in, whether they know what's going to happen, whether there's a bunch of unknowns out there. And right now, there's a bunch of unknowns out in the market that have not or cannot be priced in. And so the market has been acting all sorts of weird. And when things are weird, day trading and scalping is very difficult to do. So our basic, just for we have a lot of new listeners lately. Again, thank you so much for the support that we've received. Thank you for leaving your reviews and sharing with your friends. It really helps out a lot. We have a lot of new listeners, and so just kind of our basic, to give a basic groundwork for people, Jordan and I firmly believe, and this is kind of what sets our idea apart about day trading, is that a lot of it is based off of feel. A lot of it is based off just experience, and there's a lot of gray area. And the only way you get good at day trading is to trade a lot. And this is why we scalp, because it fits a lot more experience into a shorter amount of time. And so, because a lot of trading is based around feel, anytime the market's acting weird or different than it normally does, all of a sudden your feel goes out the window, right? The feel that you've developed of how a market typically behaves when things start acting differently, like a president gets elected that was kind of a dark horse, when he starts throwing some tariff news around, and when investors don't know what's going on, things start acting odd, and then the feel kind of goes out the window, and so you have to start correcting for that, and that takes time. And this is why survivability is so important.
Yeah. And to tie into that, so when the markets are volatile, this is a specific time when you should be looking to lower your risk to reward ratio, right? So if you just look at the charts from now comparing to back or late 2024, what we're seeing at least what I'm seeing in the NASDAQ specifically, because that's all I trade, is a very, it like, yes, it'll go in one direction, but there's a lot of movement up and down before it moves in that direction. And so, I was usually trading 1 to 2, 1 to 3 this last year, and I've had to adjust that to 1 to 1, 1.5 max, just because I kept going, it kept going to 1R and then snapping back before then finally going in my direction. Ask Levi, I was all pissed off today because I took a trade that I thought was perfect, and it would have been minus it came up, ticked me out, and then went exactly where I thought it would twice. So it is what it is. But just remember, this is a volatile time, and as such, that's when you should be looking to lower that risk to reward ratio.
Yeah, lowering the risk reward is a step one. I think that is absolutely vital to, the kind of the definition of volatility is that price tends to it even within its own trends, it tends to snap back and forth. And so yeah, you can easily get caught on the back end of that. I've done that a lot. Jordan has as well. And so, yeah, lowering that risk reward, I think that's absolutely huge advice. Another thing that I've been doing is starting to back off how soon after market open I trade. I don't know whether you have, Jordan, so I'd like to get your opinion on this, but I typically trade, I give the market a few minutes to breathe and then I start trading. Um, with the market being volatile, oftentimes opens I've found have been way more choppy than normal. And so I've just backed off. If the market is moving a lot, then and it's moving big, then it doesn't hurt me to just wait an extra half an hour or wait an hour and just give the market a little bit of time to cool off from that early chop. And I found that a little bit helpful. I throw that in with also taking less risk reward, and it's helped me kind of survive some of that early morning chop right after the market opens. Have you been doing that? Or are you kind of still kind of jumping right into the trenches early on?
Yeah, I've been experimenting with both, honestly, and I've got to say, I kind of seeing what you're seeing as well, because back, a 6 months, a year ago, mornings, you right after open, you give it 3 minutes, and now you're trending in a direction, probably going to take it that direction for the next 10, 15 minutes, and you can usually get some good moves. That is not the case
Mm,
right now. As you said, some big movements one way or the other, back and forth and chopping like absolute crap. So yeah, I agree with you right now. Just the way we trade, anyways, avoiding that initial chop and waiting for the market to at least decide if it's going to move in a direction has seemed to be helpful for me. At least I'm waiting like 15 minutes now and then starting to look, unless of course, as you said, there's a big move and then you wait longer. But yeah, fully agree with you. Kind of giving it some time to cool down. This is the only time where I do use the an indicator. Anyone who's listened to us for any time knows that we do not trade with indicators. We trade naked charts. But I will use an RSI at the bottom of my screen, not because I use it to indicate when to take trades or anything, but simply because it keeps me from getting in trades when the market is too hot. If we're at 80 or we're at 20, I'm not going to be trading. So I use it as just an indicator not to take a trade, because it means there's been too big of moves for me to, for me to really establish a good trend or, a support or resistance.
interesting. Interesting. I like that. I like that. I have not, but I might have to consider doing that. Yeah, I mean, this is one of those things where Um, again, the market's acting differently than it has. I know people who've traded just fine. I've seen that. But most people are having difficulty. And again, because when the market is acting different, you have to adjust. And so I think the thing I want to leave with people, my number one point is use this time to adjust, learn to adjust, right? So we've talked about this briefly a few months ago. We talked about how to adjust as a trader, like how to actually make moves because uh, we've if you have too granular of a trading strategy, one that's too baked in, that's too A plus B equals take trade, then you don't have that flexibility to adjust. And so we talked briefly a couple months ago about how to adjust in your trading. And this is one of those moments in 2025 where you're going to have to adjust or you will get wrecked. So the thing that I've been doing to allow myself to adjust is you have to give yourself time to adjust. It's the only way to do it. And so to give yourself time to adjust, the main way to do that is to lower your risk, not just lower your risk to reward, but actually lower your risk. In other words, allowing yourself more time to survive and to adjust. And this is where maturity comes in. If you're a mature trader, you should be able to go, okay, the market's acting different. I know that I'm good, but I know that this is a different market, and so I'm going to get absolutely baked. I'm going to get drilled on this if I'm not careful. And so I have to give myself time to adjust. And the way to do that is to lower your risk. That way you can string together more losses without blowing an account, without doing anything crazy, without losing a bunch of money, and give yourself time to adjust. Jordan, you and I are already starting to adjust. You've been having some good luck recently. I have as well. Um, and that's because you can give yourself time to be able to kind of get your feet under you, start getting a feel for how the market's going in a year. And so my next piece of advice is simply lower your risk and allow yourself time to catch up. Allow that kind of those deep parts of your brain to catch up and start seeing things that maybe your conscious brain can't.
Yeah, and piece of advice would be don't forget to journal. Journal,
Yeah.
right? This is a time where, and honestly, this is a reminder to myself because I've sent some screenshots to Levi every day, but I have not actually journaled the last few days, so I need to go back and do that. But journal. The only way that you can go back and learn was happening at this time is by journaling. So guess what? New president, the markets tend to repeat themselves, right? So there may become a time, well, there will come a time when this repeats itself again. Maybe it's 4 years down the road. We've talked about before. Go listen to our episode on how the market repeats itself on a cyclical basis. But yeah, make sure that you're journaling those trades that you can be able to identify, hey, this is where I'm going wrong. This is where I'm not following my strategy. This is where I am following my strategy. And if you have those journal trades, it also means that if you call Levi and I up or send us an email and saying, "Hey, we're sucking right now. Do you mind taking a look at my journal?" We'll go, "Yeah." And 15 minutes later, at least we'll be able to give you a pretty good idea. Are you following your strategy? Are there things you can change? Things like that, which is going to be, is going to be invaluable to you. I come from a business background. I've got my MBA, and essentially, if you run a business without data, you're essentially just driving blind. So, data is power, and any data, the more data you can have, the more successful you're going to be in the long run.
Yeah, and it gives you another opportunity to drill something into your brain. I mean, the best teams, the best players in any sport they're tape watchers. They watch tape. They're the best in the world at what they do. They're better than you and I at what we do, and they're constantly looking at tape because it's the more you can kind of immerse your brain in what you see, um, it affects
Well,
you. It affects
yeah,
you down,
you're visualizing,
down the
right?
line.
So yeah, that
Yeah.
actually reminds me. I was taking a class and they were talking about visualization. And they said that if you have visualized something in your brain only once, like you visualize let's say you visualize how you would respond if someone held you at gunpoint or held you at knife point and wanted to steal your stuff. If you visualize how you respond, your response time is going to be 90% quicker than if you never visualized it before. So it just goes to show the power of visualization. And the one last story, there's a story about, I forget the guy's name, but anyway, he was held as a prisoner of war in Vietnam. He spent like 5 years in a Vietnam prison, an American guy. And when he was finally, essentially exchanged or released from prison, he came back to the States and he shot, 20, he took 20 less strokes on his golf game. He had taken 20 strokes off his golf game. He hadn't played golf in 5 years. He'd been in prison. And people asked him, well, how in the world did you just lower it? And he's like, every day I would visualize myself doing 18 holes on this golf course while I was in prison. And he literally dropped his strokes by 20. So just another example of how powerful visualization and your brain could be. Maybe we have to do a whole episode on visualization, but it's just a good reminder.
I think we should. I think we should do a whole episode on that because I just read an article on X about that,
Oh,
which
okay.
was really good. Which is it was actually tied to trading. It was a trader, and I don't actually see good trading advice that often online. But this was actually good, where you're right when you visualize success or you visualize, hey, what am I going to do in this situation? It helps you in that. It helps you significantly. And so this is he was talking about, and I forget who exactly it was, but or why you should plan ahead, when you're watching your trades going, hey, if this happens, this is what I'll do. And if this doesn't happen, this is what I'll do. Where's the overall trend and what am I looking for? And so you kind of go into each day having a general idea of what you're looking for and what you're wanting. This is why we talk about kind of having a good idea of what your perfect trade is. It helps a ton. So yeah, let's absolutely do a full episode on that. That's a really powerful idea. Thanks for mentioning the sending your journal to us. Journaling is really important. Do so. And yes, we absolutely love seeing your journals. We love giving advice and trying to help you out. We absolutely no charge. We love the our listeners have been incredibly good to us. And so we like helping you out. If you have any questions about your trading, reach out, send us an email at contact@anarchytrading.com, or reach out to us Anarchy Trading on X, and we'd love to hear your questions, your concerns, any advice you want, or advice for us on any topics you would like to hear. We'd love to get back to you. So appreciate it, everybody. Thanks once again, and have an awesome trading week.